Hey YouTube, and welcome back to the AlphaFX channel. If you're here to find out about the latest analysis and forecast about the gold USD spot market, you're in the right place. Stay tuned, it's coming. Okay, let's start the analysis on the monthly time frame for the gold USD spot market. Now bear in mind guys that I will give you only one single scenario analysis for this week, and if this gets invalidated I will only update the members in the private Telegram group because the group is before anyone else. But because I love you guys, not to be selfish, I will give you a heads up a few hours later in my public Telegram group. So if you're not a member of this group, make sure you check the link in the description and add yourself into this group, because after the members I will send you an update about what's happening with the gold market. So going back to the chart on the monthly time frame, what do we see here? You can see that the last month's candle, which is June, the low of the candle was around the 1760 area, and if you look left on the chart you can see that there is clear resistance level. And I know it's a long shot, but previous resistance levels could be a basis for good support level in the future. So this is the higher time frame analysis. I think that the 1760, 1750 area could be a really good support area for a bullish move to the upside. Now if you go down to the weekly time frame, you are going to see something very interesting, so watch closely. What do you see on the chart for this week's candle? Yes, you guessed it right, there is no bottom wick on this candle, which is really rare in case of gold. This signals a really strong upward buying pressure. But it's not normal, because if you look back historically, every single weekly candle has a bottom wick. Now in your broker you might have a tiny little wick at the bottom, but most of the brokers I've checked, because I checked about 4, 5 or 6 brokers, there was no bottom wick or any of the weekly candles. And what it tells me that the price has to come down to clear liquidity at the 1750, 1760 level. But is it going to happen this week or next week? Let's find out. So if you go down to the daily time frame, let's see what we have. You can see that there was a bullish upward movement from 1680, then 1750, then there was another consolidation around the 1800 area, bullish move to the upside, and the price broke the trend as well as the market structure, and since that we have a bearish market. And you can see that the price found support at the 1762 level, and since that started to consolidate at the lower time frame. So if you go down to an even lower time frame, for example the 4 hour, what do we have? This week we analyzed the gold market and we found this wedge which supported the price at the 1770 level. And this analysis was actually sent out on the last trading day of the week, which is Friday, and the price was currently, or previously was sitting at the 1774 level. And I sent out this chart that I expected the price to come back up and retest the 1790 level, which it actually did, and the price immediately melted back into the wedge. But you can see that the price also started to going up. Is it going to retest the 1788 level or the 1790 level? It may or may not. It's very well possible. You know, in Forex anything is possible. But even if it retests that level, I expect gold to come back down to the 1755, 1751 level. And why do I say that? Because if you go back to the weekly chart, I use the Fibonacci, and on the 1730 and 1755 level we have two interesting and really strong Fibonacci levels. And if you look back left on the chart, we analyzed, back in the, actually not going to go back on the monthly chart, but you see that on the left hand side, when we were on the monthly chart, there was clear, strong support and resistance level was sitting at the 1750, 1755 level. And because there was no bottom wick for the weekly candle, I would expect the price to come down and retest that level. And remember guys, that when the new monthly candle opens up next week, because next week July is coming, the weekly candle has to make a lower wick. And once it does, how far do you think it's going to go down? Well, if you go back to the monthly chart, you can see that the bottom of the monthly wick was at the 1760 level. So there is a high possibility that the price is going to just push down and retest the 1762 level. But if you go back to the daily time frame and put back all the drawings, you can see that I already marked you the potential levels which the price is going to retest. So if the price breaks out from this wedge to the downside, you have to wait for the retest of that breakout, or it's going to just melt immediately, because if you look back on the chart you see that there is a wedge or so here, and there was no retest of the bottom of this wedge. So you can see that the price, as soon as it broke out from this wedge, it just immediately melted down to the 1800 area. Now we have another wedge again. So what do you think is going to happen next? Definitely the price is going to break out either to the upside or the downside, but which one has the highest potential? Well, in my opinion and in my analysis, the price is going to break to the downside and going to come back to retest the 1755 area, and very well may retest the 1730 area, because remember, on the high time frame we had the weekly Fibonacci 786 level. Is it gonna push down this far? Maybe or may not, I don't know yet, but definitely the price is going to come down to the 1756 level. If it comes down to this level, because this was the bottom of the monthly wick, if the new monthly candle is going to retest this level and making the lower wick of the new monthly candle, is definitely going to retest the previous low of the monthly candle, the previous wick of the monthly candle. And once it does, my buy limit will be waiting for gold, definitely for long position. And remember, if the price is opening up and starting to make the bottom wick first, it's going to signal that there will be an impulse bullish move to the upside. So what I expect for next week, price may come back to retest the 1787 level, but I think it's going to respect the top descending trend line of this wedge, and it's going to melt down to the 1756-51 area. And this is where I'm going to place my buy limit. But bear in mind, the price could easily go down to the 1730 level, 1728, depending on how we look with the Fibonacci. But definitely there is a strong Fibonacci level at the 1730 level. So make sure you prepare for everything. If you use, be sensible with the stop loss. Make sure you manage your position. Do not risk anything more than 2 to 3%, and you will be fine. Even if you get stopped out at the 1751 level, and if the price pushed down to the 1730, you should only lose 2 to 3% on one position. Because remember, the only thing you can control in trading is your risk. You cannot control uncertainty, you cannot control price movement. The only thing a trader can control is his risk. So be sensible with the position, guys, because if the price comes down to the 1755 level, and even if it pushed down to the 1730 level, which I don't think it's going to happen, the last or the final position is going to come down. Maybe it's the 1750 level, so this is what I expect. And once it does, this is where I have my buy limit. And once it comes down to this level, definitely watch the price action. If you see any kind of rejection at this level, if you go down to the 1 hour or the 30-minute time frame, if you see clear rejection, the thing you have to look for is the price to make market structure. So if the price comes down, bounces back, start forming a market structure of higher highs and higher lows, it's a clear signal for us to buy. And once we have the bullish market structure by the price forming higher highs and higher lows, what you have to do is put your trend line, watch previous support and resistance level, use your Fibonacci or any kind of strategy tool that you learn from other Forex mentors, and just look for buy opportunities. So the first thing you have to do is watch if the price comes down to the 1750 level, and then watch price action. If the price makes higher highs and high lows, that is a clear as a sky indication that the price is going to reverse. If it does, watch high highs and high lows or any kind of bullish market structure and just buy. But if the price breaks this kind of bullish market structure and comes anywhere below the 1750 area, do nothing, guys. Just wait the price to come down to a lower area. So let me just pull this down, not this one. I'm going to pull down this one. So if the price comes down to this level, all you have to do is shift your focus into this level and watch for bullish market structure a little bit lower. And once the price gives us a bullish market structure by the price creating high highs and high lows, this is going to be a signal to buy. So this was the weekly analysis, guys. If anything goes not as planned, or if the price invalidates my setup, I'm gonna go and give a analysis and a heads up to my team members. If you want to join the AlphaFX Academy, go to my AlphaFX website, so it's alphafx.hu. You can find out all the plans, prices and information about the current courses and mentoring, as well as the gold scalping course, because we live in uncertain times, guys. So if the price doesn't go as planned, we always have opportunities to scalp on a lower time frame, which, you know, currently the Fed is really indecisive about what they're going to do with inflation and monetary policy. So swing trading is a little bit more difficult than in normal market conditions. So what I would definitely recommend is scalp on a smaller time frame. And if you don't know how to scalp, make sure you go to my website alphafx.hu and check out the information about the gold scalping course. So I hope you enjoyed the video, guys. If you get any value out of this video, make sure you smash the like button, leave a comment below, subscribe to the channel, and have a good week. This is the Alpha FX.